Welcome to this audiobook, brought to you by MorroFx. If you're here, it means you are serious about trading, but even more serious about mastering your own mind. Because as every professional trader knows, the real game is not on the charts, the real game is in your psychology. Trading is not about predicting the market with certainty. It's about learning how to operate in an environment of pure probabilities. Mark Douglas, one of the greatest trading psychologists of all time, taught that consistency comes not from strategy alone, but from the way you think and respond to the market's constant uncertainty. The market does not care about your fears, your hopes, or your expectations. It moves because of the collective actions of millions of participants. It will never reward you simply because you deserve it. And yet, so many traders fall into that trap. They think effort guarantees outcome. That is the mindset that destroys accounts. In this audiobook, inspired by the teachings of Mark Douglas, we are going to dive deep into the truths of trading psychology. You will learn why discipline, patience, and acceptance of loss are far more important than predicting the next candle. You will learn how to think in probabilities, how to detach yourself from individual trades, and how to step into what Douglas called the zone, a mental state where trading becomes effortless, consistent, and free from emotional chaos. Think about this: every single trade you take is uncertain. You can do all the analysis in the world, mark out levels, identify supply and demand zones, wait for confirmation, and still the market might move against you. That reality is what breaks most traders. They cannot handle the uncertainty. They want certainty in a world that is built on probability. Mark Douglas explained it this way: trading is a probability game. Just like in a casino, the house doesn't know which spin of the roulette wheel will land on red or black. What the house does know is that over thousands of spins, the math will play out in their favor. That edge, that statistical advantage, is what makes the casino profitable. The same applies to trading. You don't need to know the outcome of the next trade. You only need to know that over a series of trades, if you follow your rules, your edge will play out. The problem is, most traders cannot think this way. They treat every trade as if it's supposed to be a winner. They attach their ego, their self-worth, even their identity to the outcome of one single setup. And when it fails, their confidence shatters. They start doubting their system, doubting themselves, and eventually falling into the trap of fear and revenge trading. Here is the truth: a losing trade does not mean you are a bad trader. It simply means probability has played out. If your edge is real, then losing trades are part of the game. If you expect to win every trade, you are not trading, you are gambling with your emotions. Professional traders think differently. They accept risk fully, before they even enter the trade. They say to themselves, I am willing to lose this amount, and if it happens, I move on without hesitation. That simple mental shift changes everything. Suddenly, you are no longer attached to one outcome. You are free to execute without fear. You are no longer desperate for the next candle to prove you right. The market is a mirror of your own psychology. If you are afraid, the market will amplify that fear. If you are greedy, the market will exploit that greed. If you are disciplined, calm, and detached, the market will reward you with consistency over time. Every new trader begins with hope. They come into the markets believing that with enough effort, enough indicators, enough hours of watching charts, they will find the secret that guarantees success. But the market does not reward hope. The market rewards discipline and probability thinking. Mark Douglas explained that most traders never even define their edge. They think an edge means a strategy that always works. But that's not what an edge is. An edge simply means there is a higher probability of one outcome over another. It does not mean certainty. It does not mean you will win this trade, or the next. It means that over time, if you execute consistently, the probabilities will play out in your favor. So why do traders still fail, even when they know this? Because they cannot separate their emotions from the process. They feel the sting of a losing trade as personal rejection. They feel the joy of a winning trade as validation of their intelligence. This roller coaster is what destroys accounts. You are not meant to tie your self-worth to a random outcome. You are meant to think like a casino, like a professional poker player, like a mathematician. The difference between amateurs and professionals is not strategy, it's psychology. Both can have the same tools, the same charts, the same knowledge. But the amateur trades with fear and greed, while the professional trades with acceptance and discipline. The amateur wants to be right. The professional wants to execute their edge. You cannot control the market. You cannot control the outcome of your trades. The only thing you can ever control is yourself, your actions, your mindset, your risk. And that is why Douglas said, the consistency you seek is not in the markets, it's inside you. Imagine trading without fear. Imagine placing a trade, knowing it may lose, but feeling no stress, no anxiety, no pressure. Imagine being able to execute the same setup again and again, regardless of what happened before. That is trading in the zone. That is the state where you stop fighting the market, and instead flow with it. But here is the challenge, your brain is not wired for probabilities. Human nature craves certainty. We want to know what will happen next. We want to avoid pain and chase pleasure. Trading forces you to accept pain, accept loss, and delay gratification. This is why most people cannot make it. They are not defeated by the market. They are defeated by their own inability to rewire their mind. Mark Douglas gave us the blueprint: shift your beliefs. Accept that every trade is uncertain. Detach your identity from being right or wrong. Focus on executing your edge with consistency. That is the path to freedom. Fear is the first enemy of every trader. It shows up the moment you hesitate to take a valid setup because you are afraid of losing. It shows up when you move your stop-loss further away because you are afraid of being stopped out. It shows up when you refuse to enter again after a loss, because your confidence has been shaken. Fear makes you second-guess your system. Fear makes you abandon your plan. And every time you do that, you reinforce weakness instead of discipline. Greed is the second enemy. It whispers to you when you are up in profit, just hold a little longer, maybe it doubles. It pushes you to over-leverage, to add to positions recklessly, to chase trades you should leave alone. Greed convinces you that the market owes you more, that you can squeeze extra out of it if you just bend the rules. But the market never owes you anything. Every trade is just another probability, and the moment you let greed control your decisions, you are no longer trading, you are gambling. Fear and greed are two sides of the same coin: attachment. Attachment to outcome, attachment to money, attachment to being right. To become consistent, you must learn detachment. Detachment does not mean indifference. It does not mean you stop caring about results. It means you stop giving emotional weight to each outcome. You execute your edge, you take the result, and you move on to the next trade. That is how professionals trade. Mark Douglas taught that the market offers endless opportunities. There will always be another setup, another move, another chance. Missing one trade does not matter. Losing one trade does not matter. Even losing a series of trades does not define you. What defines you is whether you can stick to your process through it all. The truth is, you will never eliminate losing trades. But you can eliminate the emotional destruction they cause. You do that by redefining what a loss means. A losing trade is not failure. A losing trade is the cost of doing business. It is your entry fee for participating in the game of probabilities. Once you accept this, fear loses its power. Think of yourself as a casino owner. Every single spin, every hand of cards, is uncertain. But the casino is not afraid of losing one game, or even 10 games in a row. Why? Because they know the math. They know their edge plays out over thousands of repetitions. That is how you must approach trading. If you have an edge, your only job is to execute it with discipline. The rest will take care of itself. This is why consistency is not about predicting the market. It is about controlling yourself. You must become the stable force in the chaos. You must become the one thing in your trading that does not change when the market changes. That mindset is what separates the 5% who make it from the 95% who quit. The single most important shift you will ever make as a trader is learning to think in probabilities. Most traders believe they already do this, but they don't. They say things like, "This setup always works," or, "This strategy never fails if I wait for confirmation." Those statements reveal a hidden belief in certainty, not probability. And certainty has no place in trading. Probability thinking means this: every trade has an uncertain outcome. It may win, it may lose. You don't know. What you do know is that over a large enough sample size, your edge will deliver a statistical advantage. That's all you need. But to operate this way, you must train yourself to detach from the outcome of any single trade. Mark Douglas used the casino example for a reason. Casinos do not care about one roulette spin. They don't care if a gambler hits a lucky streak. Why? Because they know that over time, the math works in their favor. Imagine if a casino owner panicked every time a player won a big jackpot. They would close the casino after a week. But they don't. They accept variance. They trust probability. They let the edge play out. You must learn to think the same way. Stop caring about being right on this one trade. Stop measuring your worth by the last outcome. What matters is consistency over time. If you take 100 trades, and your edge produces a positive expectancy, then you are profitable. But if you obsess over the outcome of each trade, you will never even make it to trade number 100, because your emotions will knock you out of the game. Detachment is not easy. We are human. We feel excitement when we win, and pain when we lose. But in trading, those emotions are dangerous. They cloud judgment, they distort reality, they pull you away from logic and into impulse. Douglas said it best: the market does not generate your emotions. You do. The market only reflects them back at you. So how do you train detachment? By fully accepting risk before you enter a trade. That means, before you click buy or sell, you already know how much you are willing to lose. You have accepted that if the market goes against you, you will exit without hesitation. When you do this, the fear disappears. Because you have nothing to fear. You already accepted the worst-case scenario. The other way to practice detachment is to redefine what success means. Success is not a winning trade. Success is following your plan with discipline. If you took a trade that fit your rules, accepted the risk, and executed your edge, then it is a successful trade, regardless of outcome. Once you reframe success this way, the pressure lifts. You are free to execute again and again, without attachment. This is the mindset of consistency. This is what it means to trade in the zone. At the core of trading psychology lies your belief system. Most traders think their results come from strategy, from setups, from indicators. But beneath all of that, the real driver is what you believe about the market, about yourself, and about money. Mark Douglas understood this deeply. He said, "Your beliefs are what create your perception of the market. Change your beliefs, and you change your trading." Think about it. If you believe the market is out to get you, every loss will feel like proof. If you believe the market is manipulated, every sudden move against your position will feel like betrayal. If you believe that trading is supposed to be easy money, every drawdown will feel like injustice. These beliefs shape your emotional responses. They shape how you act. And they shape your results. Most traders never question their beliefs. They never stop to ask, what do I actually believe about trading? About risk? About winning and losing? Instead, they carry hidden assumptions, and those assumptions sabotage them again and again. Mark Douglas taught that to trade consistently, you must reprogram your mind. You must replace destructive beliefs with empowering ones. For example, instead of, I need to win this trade, replace it with, I don't need to win this trade, I only need to execute my edge. Instead of, losses are failure, replace it with, losses are the cost of doing business. Instead of, I must avoid pain, replace it with, I accept risk fully before I act. Instead of, the market is unpredictable and scary, replace it with, the market is neutral. My edge and discipline create my results. This process takes time, but every belief you reframe brings you closer to freedom. Freedom from fear, freedom from attachment, freedom from the emotional roller coaster. Beliefs are powerful because they filter reality. Two traders can watch the same chart and see completely different opportunities. One sees danger, the other sees potential. One hesitates, the other executes. The chart didn't change. What changed was the belief system behind the eyes looking at it. If you want to trade in the zone, you must build beliefs that support consistency. You must believe that you don't need to know what happens next. You must believe that your edge works over time, not every time. You must believe that every trade is just one of many, not the one that defines you. When these beliefs are burned into your subconscious, discipline becomes natural. You no longer have to fight yourself. You no longer feel paralyzed by fear or seduced by greed. You simply act, calmly and consistently, like a casino running its edge. This is the transformation Douglas wanted traders to make, from emotional gamblers to detached professionals. From people chasing certainty, to people operating with confidence in uncertainty. That shift is everything. There is a place in trading where everything feels effortless. Where you no longer second-guess yourself, where hesitation disappears, and where each decision feels natural. Mark Douglas called this the zone. And once you experience it, you understand what true consistency feels like. The zone is not about predicting the market perfectly. It is not about catching every top and bottom. The zone is a state of mind. It is when you are so aligned with your rules, your beliefs, and your edge, that trading feels almost automatic. You see a setup, you act. You manage risk, you move on. Wins feel natural, losses feel neutral. There is no fear, no greed, no attachment. There is only flow. But here's the truth, the zone is not permanent. It comes when you train your mind and your habits to such a degree that emotions no longer interfere with execution. It is like an athlete who enters the flow state during competition. They are not thinking, they are simply doing. Their body and mind are aligned. For traders, the same thing happens, but only after deep psychological work. So how do you enter the zone? First, you must fully accept uncertainty. If you are still searching for certainty, you will never find it. The zone is built on the belief that every trade is uncertain, and that this uncertainty is not dangerous. It is simply the nature of the market. Second, you must detach from outcome. If you are still attached to needing this trade to win, you cannot be in the zone. Attachment creates pressure. Pressure creates fear. Fear blocks flow. Detachment sets you free. Third, you must trust your process completely. The zone comes when you stop fighting yourself. You no longer hesitate, because you know your edge is valid. You no longer doubt, because you know losses are part of the game. You no longer chase, because you know opportunity is endless. When these conditions align, you enter a state of calm execution. Trades come and go, but your mind remains steady. You are no longer riding the emotional roller coaster. You are watching the market with clarity, responding without resistance. This is trading in the zone. Douglas explained that the zone is not luck. It is not magic. It is the result of aligning your beliefs, your risk acceptance, and your discipline. Once you reach it, you realize trading was never about predicting. It was always about mastering yourself. If the zone sounds like a dream state, untouchable and rare, understand this, it is within your reach. The zone is not reserved for elite traders only. It is a state of mind that anyone can train for, just like an athlete trains their body and mind for peak performance. The first step is building awareness. You cannot change what you are unaware of. Start by observing yourself as you trade. Notice when fear enters. Notice when greed whispers. Notice when you hesitate or when you rush. Don't judge yourself. Just observe. The simple act of awareness begins the process of transformation. The second step is risk acceptance. Before you enter any trade, define your risk and accept it fully. Say to yourself, I am willing to lose this amount. If you cannot accept the loss, reduce the risk until you can. Only then are you free to act without fear. Risk acceptance is the gateway to detachment. The third step is journaling. Every professional trader keeps a record, not just of entries and exits, but of emotions and thoughts. Write down what you felt, why you acted, what beliefs showed up during the trade. Over time, patterns will emerge. You will see the invisible drivers behind your actions. And once you see them, you can change them. The fourth step is visualization. Athletes visualize success before competition. Traders can do the same. Close your eyes, and imagine yourself taking trades calmly, accepting losses without stress, following your plan without hesitation. The brain does not fully distinguish between imagined practice and real experience. Visualization builds new neural pathways that make calm execution natural. The fifth step is redefining success. Stop measuring success by whether a trade won or lost. Start measuring success by whether you followed your process. Ask yourself after each trade, did I execute my plan? Did I manage my risk? Did I stay detached? If the answer is yes, then it was a successful trade, even if it lost money. This mindset rewires your brain to focus on consistency, not outcome. Finally, the sixth step is repetition. Consistency in trading is born from consistency in training. You cannot rewire beliefs overnight. You must repeat the process daily, until it becomes second nature. Journaling, visualizing, observing, redefining, these practices compound over time. One day, you will notice that fear is gone. Hesitation is gone. You are simply executing. That is when you know you are moving into the zone. Mark Douglas insisted, trading mastery is not about adding more indicators, or finding a perfect strategy. It is about mastering the mental environment in which you operate. The zone is created inside you. And every exercise, every practice, every moment of awareness builds the foundation for it. Trading is not a sprint. It is a marathon without a finish line. Many traders enter the markets with the illusion of quick riches. They want results in weeks, sometimes even days. But the market punishes impatience. The only traders who survive are those who think in decades, not in days. Mark Douglas explained that long-term consistency is the ultimate goal. Not big wins. Not quick riches. Consistency. Because with consistency comes growth, compounding, and freedom. But to stay consistent, your psychology must be prepared for the long game. This begins with patience. The market does not move on your schedule. It does not care that you want to trade today, or that you feel like you deserve a win this week. Opportunities come when they come. Some days will be full of setups. Other days will offer nothing. Professionals wait. Amateurs force trades. And forcing trades is the fastest way to destroy an account. The second element is resilience. You will face drawdowns. You will face losing streaks. Even the best traders in the world lose. But they survive because they are resilient. They accept loss as part of the business. They manage risk so that no single trade, no single week, no single month can destroy them. Resilience comes from planning for the worst while still believing in your edge. The third element is discipline. Discipline is not a switch you turn on. It is a habit built over time. It is the daily act of following your plan, no matter how you feel. Discipline means showing up when you don't feel like it. It means closing the platform when your rules say stop. It means trading like a professional, not like a gambler. The fourth element is adaptability. Markets change. Conditions shift. What worked last year may not work this year. Professionals adapt, but amateurs cling to outdated methods. The long-term trader understands that evolution is part of survival. But here's the key: adaptation is not chasing. It is not abandoning your principles. It is adjusting within the framework of discipline and probability. Finally, the long-term mindset is about detachment from outcome. You are not here to win today. You are not here to prove yourself on this trade, or even this week. You are here to build a career, to create freedom, to master yourself over time. That requires letting go of the obsession with immediate results. Mark Douglas often said, "The consistency you seek is in your mind, not in the markets." This is the long-term truth. The markets will always change. Volatility will rise and fall. Trends will appear and vanish. But your inner state, your patience, resilience, discipline, adaptability, and detachment, can remain stable. That is what carries you through the years. The traders who last are not the smartest. They are not the fastest. They are the ones who mastered themselves and aligned with probability. They are the ones who survived the long game. And survival is the real measure of success. At the end of the day, trading is not about beating the market. It is about beating yourself. The market has no power over you. It does not know who you are, it does not care if you win or lose. It simply moves, offering opportunities, one after another, forever. The real question is, how will you show up? Mark Douglas taught us that consistency is not found in the charts, or in the strategies, but in the beliefs and mindset you bring to the game. To trade in the zone is to release fear, to accept uncertainty, to detach from outcomes, and to trust your edge. It is to understand that every trade is just one of many. That a single win does not make you, and a single loss does not break you. When you trade with this mindset, you step into freedom. You no longer chase certainty. You no longer fear losing. You no longer gamble with emotions. You simply execute, with calm confidence, letting probability do its work. That is the path of the professional. That is the path of consistency. So, as you finish this audiobook, take these truths with you. Accept risk fully before every trade. Redefine success as following your plan, not winning every time. Think in probabilities, not in certainties. Build patience, resilience, discipline, and adaptability. And most importantly, remember, the market is neutral. The consistency you seek lives inside of you. If you commit to these principles, you will transform not only your trading, but your life. Because the lessons of trading psychology are the lessons of discipline, self-awareness, and growth. This has been a MorroFx production. If this audiobook has helped you, make sure to like this video, subscribe to the channel, and share it with someone who needs to hear it. By supporting the channel, you allow us to keep creating content that pushes you closer to mastery. Remember, the market will always be there. The only question is, will you master yourself enough to be there too?